to do a quick walkthrough of our Paycheck Protection Program loan tracking worksheet. There's several tabs here at the bottom. It starts with the instruction tab. Essentially, these are waivers and warnings that what we've put together here is probably not going to be the final version and is probably, or at least possibly not going to be the same calculation that your bank would use. It'll be close, but we're not guaranteeing that we're going to exactly meet their requirements. We'll send updates as they become available, and you'll be able to should be able to copy your data from the worksheet that you've been working on to a new one. So I'm going to go to the budget tab, and the budget and the actual look very similar. The budget tab is a place to give you kind of a playground to be able to enter some data, to do some planning, and attempt to simulate what you think is going to happen. So at the top here, we're going to start with your loan amount. You're going to put in whatever it was that was deposited or will be deposited into your bank account. I'm just going to pick a number here and start with that. If you happened to also get the Economic Impact Disaster Loan Grant, you would enter the amount that you received here. That affects the amount of the PPP loan that is forgivable. So if you received any kind of grant money, you would put that in that box. And at the end, we add it to the amount of the loan that's left from the PPP because it's not forgivable. In these boxes, you're going to enter the full-time equivalent staff that you had as of March 4th of 2020. And then you're going to fill in the full-time equivalency from February 15th of 19 through June 30th of 19, and the full-time equivalents from January of 20 to February of 20. This box you're only going to use if you operate your business as a sole proprietor. This is your net income from your 2019 return. If you have not filed yet, you could put an estimate there. I'm going to leave this blank for now to give an example based on not being a sole proprietor. Here you're going to put your loan funding date, and you need to put the slashes. It's month, day, year for, let's say, 4/18 of 2020. What that's going to do is start to fill in our spreadsheet and make it start to come alive. So this is based on an 8-week period. The end of each period is going to be filled in based on the date that we received our funding. The full-time equivalents that we think we're going to have in each of those weeks, you can fill them in, and that starts to determine what our average full-time equivalency is over that time period. You're also going to fill in your payroll wages that you think you're going to have. You might look at it based on what week those wages are going to happen. If you get paid every week or every other week, you'll fill it in accordingly. And then how much you plan on paying. You're going to estimate your payroll taxes. For example, state unemployment. This is going to be based off your payroll reports. It'll be a few $100s or a few $1,000 depending on how many employees you have and how much turnover you have. We'll just plug in a simple number here. You can look at your payroll reports to get an estimate of what that number might be. Your health insurance, generally you're going to only pay that once a month, but that goes towards the forgivable portion of your loan as well. And if you make the employer retirement matching contribution during this 8-week period, you will be able to include that as well. So we'll put a number in here. The average sole proprietor income is blank because we're treating this as not being a sole proprietor business. And then we come down here and fill in some numbers for our electricity. And again, we're only going to pay that once a month generally. Same with our other utilities. And these are just random numbers, estimates maybe. And then maybe our rent. We're going to do that once a month as well. If you own the building, you might have mortgage interest. We're going to leave that blank for right now. So once we have this estimate of what our numbers are, our goal here is to one, determine how much of the paycheck protection money we still have available. So we have not spent or budgeted $21,000. Means we have $21,000 left to go, or left to be used for things like payroll. You could bump up your wages to use that up, so it's forgivable. You may just want to let that turn into a loan. Down here in the green box, this is a calculation that's determining whether or not the amount that was used exceeds more than 25% on non-payroll items. As long as it stays green, you should be good with the forgivable amount, and the full amount that you've spent should be forgivable. Whatever you haven't spent will turn into a loan, and we have that calculated over here on the left. On the live worksheet, or the actual PPP worksheet, we show you an estimated loan amount, and I'll show you that in a few minutes. The calculations here are here and here are determining what the change in full-time equivalency staff looks like. As long as one of these stays at 1 or above, you should be good, and you should not have any further reduction in your forgivable amount. We have not built that into the worksheet just yet. We're waiting for specific guidance from the SBA on the order of calculations. But as long as you stay positive or above 1 in one of these calculations, you should be okay. To the extent you do not maintain your full-time equivalent employees, you will have a reduction in the forgivable amount. So that's a real brief look at the budget screen. Now we can jump over to actual. And again, you're going to fill this in based on your actual amounts and when they happened. And you're going to fill this in each week based on what actually happened. Maybe you didn't pay any payroll this week. Maybe your payroll doesn't happen until next week. You're just going to fill it in when it actually happens. You're going to fill in your utilities and your rent, etc., as you actually make the payments. And I'm going to fill in a number here to give you an idea of what happens on the loan side. So we have not used all of our loan proceeds, or actually we exceeded our loan proceeds. Let me back this off a little bit. So we have $5,000 left in loan proceeds. Our spending for payroll versus non-payroll it's in the positive, so we're good to go there. But we didn't spend everything, so we have $5,000 left. That becomes part of the loan, $5,000. The estimated payments are going to start in October of 2020, and the estimated payment is $210.51. We know that number is going to change, and it just gives you an idea of what the amount's going to be. It's based on our estimated loan amortization schedule here. There's a 6-month deferral period. That's why these are 0. We're just using that to kind of give you a ballpark idea of what your payment amount might look like. That is a real quick instructional video on how to use the payroll protection loan spreadsheet. Again, it's provided with no warranty, no support. It's just a tool to give you a very rough idea of what your forgivable portion is and what might turn into a loan. We wish you well and look forward to assisting you with other areas. Thank you.